Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at it's sad like she fine as it. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's from pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and wolves. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and die. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them gain, make profits. While I'm still in my same making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? And make profits. Hey, Suge, Mike, what we doing? And make profits. Yo, Wolf, Professor, what we doing? And make profits. That TTG money gang. And making profits. We some snipers.
Hey, yo, what's up, everybody? What's going on? Welcome to the True Trading Group live stream. Folks, my name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader at True Trading Group. In case you guys didn't know, we're the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. There is literally something for everybody here at True Trading Group. If you are wondering why you should listen to anything that I discuss on this channel, it's because I was trained by professionals on Wall Street. My first job out of college was working at T3 Alpha Fund in New York City. They had me go through a training program before they let me touch $1 of the fund's money. Then 2008 happened. That was the Great Recession, the big stock market crash. But it's also the same year that I received one of the firm's Trader of the Year awards. You fast forward now, and I'm the co-founder and head trader of TTG, along with my team of 8 other professional full-time trading mods and an over 30-person staff. We have helped thousands of members from all over the world to reach their goals. We have over 10,000 members in 114 different countries, truly a global community here at TTG. People from all walks of life, from all experience levels. There's literally something for everybody here at your trading group. So if you guys are ready to learn, trade, and profit for real, you've come to the right place. 6 nights a week, Sunday through Friday, I go live on this channel where myself, other mods, and special guests will drop golden nuggets, give you free lessons, education, trade ideas, and market commentary to help you make money. That's the goal, right? That's why we are all here. So welcome, subscribe, smash that like button, turn on your notifications. Do not ever miss out on any of these live streams because we're dropping golden nuggets on a regular basis. A little bit of a back and forth type of day today, kind of a bit of a roller coaster. We started off down big, then we rallied up to be up big, and then we finished the day basically flat. Slight red day in the overall markets. You got a couple of earnings that are coming out here after hours. Nike's trading higher, which is a bit of a surprise because everybody is worried about the consumer and the consumer, slowing down their spend. But they're maintaining their guidance for the rest of the year. They're not expecting that slowdown. So Nike trading to the upside. I got to be honest with you, I think Nike in the low 70s here is actually a pretty decent long-term scoop up because this is just such an incredible level of support. When you guys take a look here, back at Nike, you see that's this level here used to be resistance, prior all-time high in 2015. You then broke above it, was support in 19, was support during the COVID bottom, and now you're right back into that level. I actually think this is a pretty decent spot for Nike. 70s, knowing that you've got another huge support level down there around 50. I just think this is a decent spot. If you want to own Nike for the long term, I really feel like this is your risk, and I feel like this is your potential reward. So I know that everyone's expecting, the consumer to slow down further, but this $50 bottom, I think is pretty solid. And I think that if you don't own it and you want to own it, I think the 70s is a pretty decent spot to do so. But 70s into the 60s seem like a pretty good area in my book. Okay. That's Nike, like anywhere down in here. Because honestly, I don't know if Nike's going to get below that 50. I honestly don't personally think so. So that's Nike. Then you had FedEx. FedEx came out with some earnings. They are trading though to the downside. And that I think was kind of expected. I think the Nike quarter was better than people had anticipated, but the FedEx quarter, not as good. Even though they did raise. All right, $4.51. That's up from $3.86 a year ago, but analysts were expecting $4.56. Okay. Analysts were expecting 456. Revenue for the quarter, 22.2 billion. That's up from 21.7 billion. Analysts were expecting 21.87 billion. They said they expect 25 adjusted earnings per share between 18 and 1860. That's compared to analyst expectations of around 1950. So lower than expected on the EPS for the year. They also expect flat to slightly lower revenue for fiscal year versus prior forecasts for approximately flat revenue. So slightly lower revenue. So they're coming in a little bit light there. So not all that great of a guide for the remainder of the year. And that's got the stock trading down off another couple of percent, down 4.5% there on the day. Okay, so we are trading to the downside there on FedEx. Yeah, the analyst used as another example of analysts doing a terrible job. Company did fine. Yeah, I'm not a big fan of going with analysts. With analyst comments, it's the thing that I don't necessarily like about. I mean, listen, analyst expectations is one thing. I mean, you have to have an expectation. It's not just one analyst, right? It's the consensus of what people are expecting, and that has to do with the guidance that the company gave the prior quarter and what they're seeing in the industry. You have to give some type of a number out there, and companies will miss or meet or beat those analyst expectations. But I'm not more so what I'm not necessarily a fan of is when you have like analysts that come out and do, price target increases or price target decreases. They go overweight, underweight, equal weight. Because I just feel like a lot of these analysts will try to just kind of make a name for themselves, and sometimes they just like to put out like the crazy call and be right on it. I don't really necessarily listen to like analysts upgrades and downgrades. They might have maybe an impact depending on the credibility of the analyst, if it's an upgrade or a downgrade that day specifically, if it's a major firm or if it's one of the top performing analysts that put the note out, then you can see a reaction in the stock. But if it's a smaller firm or an unknown analyst, I don't really personally pay that much attention to it. Like there's been times in the past when like I've gone long on a day where some analysts like lowered their price target and vice versa, and the stock did the opposite of what that analyst is expecting. You also have to realize that when analysts put those price targets out, they're longer term targets. That has nothing to do necessarily with what the stock's going to do that day. So that's also something important to kind of to realize. But anyway, FedEx trading to the downside. All right, down about 4.5%. And then the bright spot is Micron. What a quarter here for Micron. Revenue rose, right? EPS. They set their outlook for the next quarter, $1.56 versus 42 cents a year earlier, $1.56 earnings per share. That was against analyst expectations of $1.43. Revenue was 8.05 billion. Analysts were expecting 7.9 billion, but check out this jump from a year earlier. Last year, their quarter was only 5.82 billion. They did $8 billion this quarter. That's pretty good, right? And their revenue for the next quarter, they're anticipating 8.6 to 9 billion. Analysts were only expecting 8.48. So that's pretty nice. That's pretty nice. Stocks trading up 6%. I think that's a welcome surprise. I think these are pretty welcome surprises, like Nike and Micron having some pretty decent earnings, and the stocks both, trading up a little. Nike's starting to fade just a little bit. Nike's fading just a little, but nonetheless, the earnings weren't that bad. I think people were expecting all of these earnings to be bad. Nike and FedEx specifically because of like a weakening consumer, and that's what everybody's been scared about. I think everybody was expecting really bad earnings out of Nike and bad earnings from FedEx, but they actually weren't too bad. And then Micron also is, I think, is a big welcoming surprise, because your semiconductor stocks have not been doing well. Semiconductors have been beaten up lately, especially like AMD. NVIDIA has pulled off significantly off its highs. People have been worried about some semiconductors and the demand for hardware as AI and CapEx spending from the hyperscalers kind of slows down. So people were worried, a little worried about that. I have not, guys, I don't even remember the last time that I traded Micron. It's not really a great day trading or swing trading type of stock. I don't necessarily think I'm going to have it on my watch list for tomorrow either. But you're still in this massive range, this massive consolidation that I'm just not so sure that there's a real clear trade here. I mean, for me, you just have such obvious resistance up here around 115, 114, and such clear support down there at 85. And I don't think you really want to try to transact or try to trade it until you get to these levels and just trade the levels rather than trade kind of the noise in the middle. I feel like it's pretty easy for you to get chopped up inside of this, trying to go long or short or long or short or long or short and get yourself kind of spun around. So I probably am not going to have any of these stocks, honestly, on my watch list for tomorrow. I'm not really going to have FedEx, Nike, or Micron, but those are other stocks that just came out and reported earnings. So we want to make sure that we go through that and we talk about them. Okay. Today, nice, green day for us inside True Trading Group. I made my money trading ADTX early in the morning. Then we got out of that trade, even well before lunchtime, we were out of that trade. We kind of caught a little bit of a morning push there on ADTX. The futures room, excellent day in futures. Futures, we caught the long in the futures room today, very early off of a key support level. I mean, this is the chart of the SPY. I don't have my futures up, but I'll just show you guys the support level here on the SPY, and you can just line it up with your futures levels for my futures traders that are out there, so we can just keep it on one chart. You'll see this previous resistance level back here on the 14th. You broke above that, became support on the 17th. Prior to that, you can see all of this resistance back here on the 11th and the 12th. Prior to that, it was support on the 10th before you broke down. Then resistance on the 11th, resistance on the 12th, right? Resistance on the 14th, broke above, support, gapped back underneath on the 18th. Resistance, gapped back above yesterday, and then you stuck that bottom on the Fed meeting. So there was the Fed meeting. I'm showing you just to show you the amount of structure that you have at that 562 zone. And then today we opened up low of the day right there again, back against that level. And then once you started to push, okay, our traders in the futures room, because we trade everything in True Trading Group. We trade stocks, we trade options, we trade futures. And we actually have one room that is completely dedicated to futures trading. And all of the trade alerts in that room are specifically futures alerts. Okay, so it was on the MQs and also the MES were the futures that were being traded there in that room. And they were able to capitalize and catch this beautiful push off the open. We got further today than I thought we would. Okay, when we were in the pre-market session, we were going over all of our analysis for the day, as we always do. In TTG, myself and the 8 professional traders that are mods, we all share our screens with you during the day. We all give you our watch list and everything else. But before the market opens, we tell you what we think the market's going to do, and we tell you what stocks we're focused on and the prices we're going to get in and out of those trades. So you already have a really clear understanding of what the game plan is before the day starts. So you don't have to necessarily worry about chasing trade alerts or anything. You guys know what the game plan is. I didn't think we were going to get all the way to yesterday's high. I thought maybe we would have kind of stalled out somewhere up in this region, but momentum took us a little bit further before we ended up getting the pullback, right? Before we ended up getting the pullback there, back into the close. But this resistance level now firmly intact with a double top there intraday from today. And that also puts you right into those low 570s, up into really like 5,700 on futures, into 5,800. And that takes you right into this 200-day moving average on the daily chart here for the SPY. And that's really the resistance level that I think everybody really needs to be focusing on and paying attention to, because that's your mark. And that's the area that I think that you're safe with shorts. I do. I think from like the 200-day up to 580 on the SPY, that's the area that I think you're safe to be short at or against, meaning you can enter your shorts there, or you can, have your stop loss on your shorts above that region. Because I do think that we're going to have another leg to the downside. I don't think all of the risk is off I don't think that we have, I think that we're going to see still kind of a peak fear type of moment in the month of April that we just haven't seen yet. I'm not sold yet, guys, that this is the bottom for the year. I think that we might have one more leg to the downside. You might push a little higher here first to suck some more longs in, but then I think that you're going to drop this thing back out kind of as the month goes on into the month of April. And that is the region. This region right here is where I really want to start to be I want to be a buyer in the long-term portfolio. I've already nibbled on some stuff. I know we have a lot of people here that are on the live show right now that are not members of True Trading Group, but last week I nibbled on some stuff. I nibbled on 10 different stocks, nothing major, nothing huge. I just nibbled on a couple of 10 different names. But I do think that we're going to go a little bit lower, and I'm trying to have my bigger purchases in my long-term portfolio. I'm trying to have those at some lower prices. And I think maybe we can get one more leg to the downside into the month of April, as I think there's just a lot of catalysts that are going to come to head in the month of April. You got to think about what might occur. Well, as you roll into the month of April, the big thing is April 2nd, the reciprocal tariff deadline. So that's number one. That's something else that, might scare the markets once we see what happens with April 2nd and the tariffs. That's number one. But then you also have what could be a hotter than expected inflation report because of the anticipation of those tariffs affecting the month of March and beginning to see price increases in March to go into effect to kind of in anticipation of tariffs. So that could lead you to a little bit of a hot CPI print. You could also get a weaker labor report in the month of March as some of the layoffs that you've seen over the last month or two, specifically some of those federal layoffs, but also you're seeing it now on a private side. You can see that maybe start to factor into a weaker jobs report. You had a weak jobs report for last month, so it is possible you can get another weak report for the month of March. And then you also have taxes are due, so you might get some forced sellings for people to pay some tax bills and some tax liabilities. You have that, and then you have earnings. You have earnings season, and half of the first quarter. From the middle of February to the end of the first quarter, you have the worries and the concerns about tariffs. So you could see a disappointing first quarter and a very conservative guide for the second quarter because companies may not necessarily know yet what the deal is with tariffs. So they're going to be conservative on their guidance because of that not knowing. I don't think you're going to get aggressive raises from companies for their guidance for Q2. There's no need. Nobody is anticipating these really aggressive raises in companies' guidance and outlook. So I think you might have a conservative guide. That could also take markets to the downside. So all of these things could come to a head to cause a little bit of a moment of like a peak fear, peak uncertainty type of moment. And that can maybe spike the VIX into the 30s or so and give us a real potential bottom. I think you need one more leg to the downside before we do that. I think that could come in the month of April. And if and when that happens, if I'm right about that, I will be buying that. Okay? I will be buying that. I was telling you guys that now. I don't think that we're going to have a recession this year. Some people do. I don't. What will make me be wrong about that is most likely if the tariffs are higher, aggressive, and are here for much longer, a much more extended period of time, that would make my call on that most likely wrong. But the reality is, we even heard Jerome Powell say it yesterday. Jerome Powell said nobody has high conviction with their outlook because nobody knows what the status of tariffs is going to be. Nobody knows what products are going to have tariffs from what country, for how long, what percentage, what countries have renegotiate trade deals and we come to an agreement and tariffs come down versus which ones stick. Nobody really necessarily knows how that's going to play out. So it's very hard for anyone to try to model out any type of call and have really high conviction on it. I sure as hell don't. I don't have very high conviction that I'm sitting here saying, hey, yeah, I don't think we're going to have a recession. Wouldn't say necessarily that I have very high conviction on that. I think that it's possible you can have a recession. I just don't think it's likely. but it's certainly possible. But I'm going to be a buyer before that. I'm going to buy. I'm telling you now. If we get one more leg down in the month of April or so, I'm buying it. I'm just telling you guys this now. All right. Members of True Trading Group, you guys will know exactly what it is that I'm buying. I tell everybody, what I'm buying in my long-term portfolio and when. We anticipated a correction this year. We've anticipated the correction this year. We put it in our market outlook report. I publish a market outlook report every year. Last week of December, the first week of January, this year was in early January. And in that report, I said, I expect a correction this year, which we have had. NASDAQ is still 12 or 13% down. They're still in correction. The S&P is no longer in correction territory. We fell into correction territory for one day, and then we snapped back out of it. I'm just not so sure that that's it. We're going to be in correction for one day on the S&P. I think there's more. I feel like there's more risk that's got to come off. Credit spreads have started to tick higher a little bit. I'm watching that very closely. That is the real sign. If there's any real problems in the economy, you'll see credit spreads begin to widen. And you have seen them tick up a little bit, 70, 80 basis points, which is not nothing, but it's also not sounding an alarm yet. You're still within a very acceptable range for those credit spreads, but it is something I'm watching very, very, very closely, because if there's real economic problems ahead, you'll start to see those credit spreads get blown out. You'll start to see them really, really widen out. That's a pretty telltale sign of a lot of, previous recessions or severe economic downturns, whatever you want to call it. So we've seen a little bit of an uptick, but nothing severe yet. So I'm watching that closely too. So I'll let you guys know, obviously, if I change my mind. If I then start to say, hey, you know what, I think recession's likely, I'll let you guys know, obviously, and it'll show in what I'm doing with my own money too. But for now, I don't think that's the likeliest of scenarios. Okay. So we are going to, I think maybe we'll with that being said, we'll switch things up, and I want to do a little bit of a grade my stock segment. It's a segment that we do on this live stream. I haven't done it in a while. I know you guys love it. Grade my stock is where you guys type ticker symbols in chat. I'll randomly pick one when I first look at the chat, whichever one my eyes land on first, and I'll give it a grade, A, B, C, D, F. And it's a combination of the technical setup and the fundamental outlook for the company long term. A means love it, buy it now. B means like it, but maybe just wouldn't buy it right this moment. C, I'm indifferent. D, I don't like it. F, I wouldn't touch it with your money. So that's kind of what I'm thinking, what I'm doing, or what I want to do with this live stream here today. Okay. Before we get into that, for those of you that are not members of True Trading Group, any of you that are on this live stream that are not members, you might be wondering, why you should be on this YouTube channel. You might be wondering, wait, guys, stop. Don't put your ticker symbols in chat yet. We have not started the segment of Grade My Stock yet. Not yet. But yeah, for those of you that are not members of True Trading Group, they might be wondering, what makes True Trading Group different from any other group or platform that's out there? My answer to you really quickly, because I did see somebody before that asked this question in chat, and I was just going through my intro, so I didn't talk about it, but I want to talk about it now. Is what makes TTG different and what makes us special from others. I think people always expect me to kind of explain why I'm such a great trader, and it's not the reason why I think you should join True Trading Group. It's not why I believe I think you should join True Trading Group. You're never going to hear me say that. The reasons why I think that you should join True Trading Group and what makes us different from other platforms and communities out there is, first, you're talking about a fintech platform that's got 10,000 members in 114 different countries worldwide. That's number one. We have like a 76% retention rate amongst our members. Our refund rate for people that are unable to make back their membership fee at least one time during their membership is just under 2.5%. And we have signed data partnership agreements directly with the NASDAQ. We work very closely with the NASDAQ directly. We received a Benzinga FinTech Chairman's Award for Best AI Analysis Tool at the Benzinga Global FinTech Award ceremony last year. So you're talking about a company that is not just, one or two guys in a Discord room just shooting the shit. This is a full-blown FinTech platform for day traders and swing traders, for stocks, options, and futures. We also cover long-term investing, and there truly is something really for everybody here. And all of those things are wonderful, and all those things are true. And when you join TTG, it's not just courses in a chat room. You guys are getting tools and resources from some of the top companies in the industry. You get tools from Trade Ideas, from TradingView, from Benzinga, from OpenAI, and you guys are able to use these tools on our platform without having to spend all this additional money to get access to dark pool data and short data and unusual options activity and congressional trading data. All that stuff is included when you join our platform. You don't have to pay extra for it. We've have agreements and deals with these companies to have their tools and resources on our platform as part of your membership. So it saves you guys a lot of money. If you pay for some of these things already, when you join True Trading, you don't have to pay for them anymore. It's all factored in. It's all included into your membership, and you get a huge discounted rate, obviously, by joining True Trading Group, because we've bundled everything all together under one roof. But the real reason why you guys should join True Trading Group is because our members actually make money. And that's just the God's honest truth. It's not because I think that I'm the best trader in the world. I'm not the best trader in the world. I'm a damn good one, but I'm not going to would never call myself the best trader in the world. Our members make money. That's what matters most. If you don't believe me, watch this. Members of TTG that are on this live stream, as I know there are many of you are, do me a favor, type the number 1 if you're making money. And if you're becoming better traders because of TTG, type the number 1 inside of chat right now. Anyone that is a member, if you're making money, type the number 1 inside of chat. And the people that are on this live that are not members, you should pay attention to how many people you see type number 1. Because all of these people typing number 1, they are your peers. They are your friends, your family members, your coworkers. They're complete strangers. If they can do this, so can you. They're not making money because they're luckier than you. They're sure as hell not making money because they have more time than you. 82% of our members have a full-time job. If they can do this, so can you. Simple as that. That's the real reason why you should join True Trading Group. None other. So if you guys are interested in TTG, go to ttgoffer.com. You'll see everything that's included on that page, right? Everything on that page is included in your membership. Okay? ttgoffer.com. Everything on that page is included with no upsell for what you see on that page. Okay? And yes, if you guys join, you will be getting that brand new free laptop that you see on that page as well. My boy Charlie Lee goes, killed it this week. I'm up $15,000 for the week trading options. Boom. This is what I'm talking about, guys. Real people, real money, real results. So go to ttgoffer.com. Everything on that page is included. We also offer you a double your money back guarantee to prove to you how much that we believe in the product that the platform that we've created. Double your money back guarantee is very simple. It's right there on the checkout page in black and white. Go read it. Okay, it's right there. Just go read it. You join today, you pay $1,047 for the whole year. If you go through our courses, pass our quizzes, and attend one study group and are still unable to make enough winning trades to equal that $1,047 membership fee, you can't do that at least one time during your membership, then that means our platform has completely failed you. And because of that, we will not just give you back $1,047. We will give you back double, $2,094 coming right back your way. That's the double your money back guarantee. I can offer you that because, quite frankly, I don't think you need it, knowing that our refund rate is less than 2.5%. If you have any questions at all about the membership, send us a text to 1-888-621-2127. Phone number's right down there at the bottom of your screen, 1-888-621-2127. All right? With that being said, let's go ahead and begin this segment of Grade my stock. Go ahead, guys. Type your ticker symbols in chat. Whatever stocks you guys want me to take a look at, whatever stocks you guys want me to give a grade on, you guys can begin typing your ticker symbols in chat now. First one up, I see Palantir. I love Palantir. Palantir is an A. I do love Palantir. It is the latest. It is the latest addition to my forever hold list. My forever hold list are stocks that I buy every year, regardless of if the market's up, down, left, right, inside out, or sideways. And I plan on holding for the next 10 years. Okay. That is my forever hold list. And Palantir has made that list. I own Palantir from around $21.50. And I think that, when you're talking about long-term portfolio buy points, the first one that we talked about coming into this year was the 70s. You dipped into 75 2 weeks ago. I think if you don't own Palantir, I think that's a good spot to take a nibble with bigger purchases down into the 60s. If you get into the 60s, that's where I would be taking a big chunk. I would be doing big purchases in the 60s. As I am very bullish on Palantir in the long term. Yes, the stock is expensive. When the stock was above 100, it was actually the most expensive stock in the S&P. So it is expensive, but sometimes stocks are expensive for good reason. I'm still very bullish on this company's future. And as the stock pulls back in, I want to buy more. Okay. As it pulls in, I want to buy more. All right. So again, buy points, buy zones are going to be right here. And then I would say right here. I'd say those are kind of the buy zones that I would look at there and I would target for Palantir. But I do believe that Palantir has as epic of a run as this stock has had over the last, year and a half to 2 years. I think that in here is a good place to buy it. And I still think that fast forward years from now, you're going to be damn happy that you did. Okay. So those are my thoughts. I own it from 21.5 and I'm buying more in the 70s and 60s. So the way I look at it is this: stock's expensive. You're paying a super high premium. But the other thing that I find interesting is that Tesla has been expensive for the last decade. Tesla was expensive in, when you talk about like valuation wise, Tesla was expensive in 2013. It was expensive. In 2017, it was expensive. In 2020, it was expensive. In 21, it was expensive. It's been expensive forever. And you can see what the stock has done over that time. In 2013, the stock was expensive. Now, once you factor in all the stock splits, remember Tesla's done multiple stock splits, right? Okay. But so when you account for the stock splits, in 2013, the stock was $10, right? But at that time, valuation wise, it was expensive. Stock's at $236 now. It was expensive in 2017 when it was at $20. It was expensive. In 2020, when it was at $40, it was expensive, right? No, it didn't used to be 1,000, Mykonos. So that's the stock split. It did two stock splits. So yes, it went to 1,000, went to 1,500, but then they did the stock splits. So it's the stock hasn't come down from that area. Okay. So those are from stock splits. That's why. Oh yeah. Okay, good. Okay. Yeah. So you know about the stock split. Okay. I just want to make sure you knew about the stock split because sometimes people don't realize it. And they're like, oh, well, the stock used to be 1,000. Now it's only 200. I didn't know that you knew about the stock split. So cool. Right. So cool. So you know already the stuff. Sometimes people don't know. So I try to explain it. But yeah, point is it was expensive the whole time, same thing with Amazon. Amazon, when you look back at Amazon valuation wise in 2013, 2015, 2017, 2018, it was expensive the whole time. It was expensive the whole time, and Palantir is also very expensive. And sometimes stocks are expensive though, for good reason. I don't know if the stock ever gets below $45 ever again. I really don't think so. $45 was that all-time high breakout. That high was put in place in 2021, and then that was tested again in 24 before you eventually broke through it with the big earnings beat and the S&P 500 inclusion news, and the stock just took that all-time high out. This is a weekly chart now that I'm on. I don't know if you ever get back below that level. If we do, I'm going to be shocked, and I'll come back on here and I'll come back on here and be like, well, I was wrong. But I don't think that the stock ever gets back below $45. I really don't. I think that there's so much growth potential that investors are willing to pay that higher premium. And I think that this is a buy in this region. I would not wait for $45. You might not ever see it again. So I know that's easy for me to say because I own it from literally down here. So I know that's easy for me to say, but I'm buying it. I'm telling you guys right now, I'm buying it right here. Like if and when that pullback gets, I'm going to buy it. I'm not waiting for 45. Okay. Those are my thoughts. That's what I'm telling you guys there. El Martinez, you think AI is a bubble? Why do you think AI is a bubble? See, I don't think AI is a bubble. I think AI is going to work its way into every single aspect of our lives the way that the internet did. You can't compare AI to the internet bubble. You can't. I'm not saying you are making that comparison. I don't know if you are. Just because you said AI bubble doesn't mean you're comparing it to internet bubble. But I'm just saying if anybody does compare it to the internet bubble, it's just not. It's not the same. No, I would definitely. I agree with you, El Martinez, that it needs to cool off. So that's part of the reason why in my Market Alec report, I published it's for members only. So if you're not a member, then if you're not a member, I don't know if you are. If you're not a member, then obviously you didn't have a chance to read my report for 25. But I publish these Alec reports every year on what I think the market's going to do, which sectors I like. And I specifically said I expect a correction. I expect a correction this year. And I specifically said that valuations just got completely out of control and I can't buy these valuations. It didn't make any sense for me to buy any of those stocks at those levels. And it leaves you susceptible when valuations are that high. If anything goes wrong, you're susceptible then to a pretty steep pullback because you're priced for perfection. And we know that, nothing really is necessarily perfect. And there's going to be slip ups. There's going to be new things that happen, new pieces of risk that come onto the table that cause those multiples to compress. And that's what you've seen so far. You really haven't seen earnings estimates come down. You've just seen multiple compression. Okay. In the first quarter of 2025, you've seen like the multiple on the S&P. You went from a forward PE of 22. That forward PE has come down now to 20. So that's just multiple compression. It's not earnings estimates have not necessarily come down yet. They very well might. Maybe next quarter, you very well might. But I don't look at this AI situation. Yeah, we maybe got a little ahead of ourselves and we maybe got a little excited, but I just don't think it's a bubble. Because a bubble suggests that there's not a lot of substance behind it. And the difference from the internet, the .com bubble, to what some people call an AI bubble is that the .com bubble, 90% of those companies did not generate $1 in, some of them, revenue. Some of these companies didn't have any revenue, never mind profit, never mind cash flow. None of those companies were cash flow positive. None of those companies were profitable. When you look at today, so when the bubble burst, you had 90% of the companies that were listed on the NASDAQ at that time were in danger of going out of business. You take a look, you fast forward to today into the AI bubble, I'm not calling it a bubble. I'm saying the AI bubble. The companies that are leading the way in AI are the biggest, most profitable companies in the world. It's companies like Microsoft, Amazon, Meta, right? NVIDIA. These companies are generating tens of billions of dollars in profit. That's why I'm saying it's such a different animal when you look at it, that I think that it's here to stay. I don't, yes, I agree. Valuations got out of control, right? We got a little excited. We got to cool off, pull back in, which we have though. You take a look, we have. I think there's still more to go. Let me be clear about this. I do think that there's still some more downside to come, but we've cooled off. Palantir from 125 down to 75. Meta from 740 down to 585. NVIDIA from 152 down to 106. NVIDIA shed off $1 trillion of market cap, right? NVIDIA shed off $1 trillion in market cap. From 150 to 100. That's $1 trillion in market cap. Shed off. That's significant. You take a look at all these other companies. Oracle, right? From 195 to 140. Take a look at some of these cybersecurity names. I'm just saying, we have cooled off. I think there's a little bit more cool off to go, but I don't think it's like a sound the alarm, like a .com bubble where like all these stocks went down 75%. And I mean, all of them, the whole NASDAQ went down 75% during the internet crash. So the .com bubble, the NASDAQ went down 75%. But in 2001 and 2002, the NASDAQ was made up of all speculative tech companies. At that time, the biggest companies in the world at that time were Chevron and McDonald's and all these boring ass companies, but those were the bellwethers and the most profitable companies at that time. Now it's the opposite. Now the biggest companies in the world are all in the NASDAQ. It's Apple, it's Microsoft, it's Amazon, it's NVIDIA, right? Those are the companies. So it's a very, very different animal now. So I don't envision there ever being a situation where the NASDAQ is going to go down 75% during a market crash like you had during the .com bubble, because it's a very different makeup of quality and caliber of companies. So those are my thoughts. That's what I think. Okay. Those are my thoughts. All right. So that's that. So that's it. Those are my thoughts there when it comes to AI. Housing bubble, or we can say crash to 2008. Oh man. No. You see, there's a very big difference between what happened in 2008 and if there's an AI bubble. If there's an AI bubble, all that means is that the valuations got out of control and the revenue is not going to be there to warrant those valuations, and those stocks are going to pull back. That is nowhere near the same thing as what happened in 2008. 2008 was a credit system, complete financial stability issue that had nothing to do with what industry you were operating in. If you have an AI bubble, it's not going to be anything that's going to be similar to 2008. 2008, trust me, I was on Wall Street working at the fund. That's actually the year that I received the Trader of the Year award. 2008 is a very different situation because was truly a worst possible scenario with true systemic financial risk that spread throughout the entire system, with over leveraged financial institutions on mortgage-backed securities where the mortgages ended up being completely worthless, and they were all leveraged against other assets. And those assets, if you have an asset that's backed up by something that then becomes worthless, then the leverage on the asset is also therefore then worthless. And it spiraled completely out of control, where all financial systems around the world were in jeopardy of becoming insolvent. That's a credit problem. Credit problems are when you have real when you have real stock market crashes and you have real recessions, it is a credit problem. If you had an AI bubble, it doesn't necessarily mean that there's going to be a credit problem. That would be something that's isolated to AI and tech. Yes, of course, the markets would go down, obviously, because tech makes up 36% of the S&P 500. So all of those stocks are going to come down, but you're not looking at a 55% drop in the S&P like you had from 08 to the 09 bottom. So from the all-time high to the bottom of 09, March of 2009 is when the markets bottomed. The S&P went down 55%. But that was a true credit blow up, not necessarily like a sector bubble. You had a sector bubble blow up during the dot-com bubble that also was part of a recession. The Fed was also raising interest rates in the late 90s to kind of prevent and slow down the internet bubble, and then it popped. I think that would be a very different situation when it comes to these are more macro type of stuff. I always enjoy having these type of conversations, but everyone's got their own opinion on stuff, But anyway, let me move on. What do we got next? Thoughts on Tesla and the robotics EV future prospects. I'm bullish on Tesla long term. I know Tesla obviously has a bunch of crap going on right now. I know everybody hates Tesla right now because of, people don't like Elon Musk now, whatever it is. But I'm bullish on the future of Tesla because I think that Tesla is going to evolve into a robotics company. I don't think that 7 years from now, 10 years from now, I don't think we're going to really be talking about Tesla in a way that how many Model 3s did they sell? I think they're going to become a leading robotics company. And I think Tesla's going to go through a period of evolution similar to a period of evolution that Amazon went through. People forget that Amazon started out as a website that just sold college textbooks. They just sold books. And now, Amazon has their hand in a lot of different areas. I think Tesla is going to go through that. So I like Tesla long term. I think if you like Tesla, if you're bullish on Tesla long term, I think the argument is tough to be bullish on Tesla long term if you're just bullish on electric vehicles. I think that's a tough argument to be had because the competition is without question and without doubt, the competition is increasing. It's increasing rapidly. Every company on planet Earth makes electric vehicles. Every car company on planet Earth makes electric vehicles now. They're getting tons of competition from BYD in China, which is obviously a huge market for Tesla. Right now Tesla's got the political problems because of Elon Musk and half the country, is boycotting Teslas now. It's just, but I'm still bullish on Tesla. Any company that Elon Musk is at the helm, I'm still bullish on. Okay. As long as Elon Musk is at the helm of Tesla, I am bullish Tesla. Okay. I'm never going to bet against Elon Musk. His business track record has proven anyone that bets against him has been a fool throughout the time I'm talking business. I'm not talking anything political. I'm talking just business wise. You look at what this man has been able to do with all of the companies that he's ever been a part of is just absolutely unbelievable. And what he's been able to do with SpaceX and just bringing those astronauts home the other day was just unbelievable. It's like, you have Starlink, you have Bohr, you have what he's doing with XAI and Grok, and it's just Neuralink. It's incredible. And let's not forget the early successes with PayPal, and then obviously what he did with Tesla. And I don't ever want to bet against that. And if he says that Tesla is going to be a robotics company, then I believe him. What if he steps down as CEO? Kurt, if he steps down as CEO, I'm being honest with you, I'm probably selling every share I own. If the day came where Elon Musk walked away from Tesla, I'm selling every share I own because Tesla gets a premium in the market of a tech company. It does not trade at the multiple of a car company. And I think Elon Musk is the reason for that, and the innovation and the tech driving behind that. That's why people have given this stock such a high premium and such a high multiple for such a long time. But if he steps down, all of that goes away. If he steps down, it becomes a car company. That's my opinion. And I absolutely do not want to own a car company at these valuations. I don't want to own a car company that trades at this multiple. So that's why I'm bullish on Tesla more for the robotics. I'm bullish on Tesla for EV infrastructure. I think Tesla is going to be a leader in EV infrastructure. Do I think they're going to try to boot him out, Kurt? I think it would be the dumbest thing that the board of Tesla would ever do. And I think the board of Tesla would dig their own grave if they ever booted Elon Musk out of Tesla. I think it would be the biggest mistake of their entire financial lives. That is my honest opinion. If you try to boot Elon Musk out of Tesla, you think the stock has gone down a lot now? Wait until Elon Musk is no longer CEO of Tesla. The stock probably goes to 50. Okay. So I think it'd be the biggest mistake that the board would ever do would be to get rid of Elon, would be to kick Elon Musk out of Tesla. That is my honest opinion. I know I'll sell every dollar. I'll sell every share I own if they kicked him out as CEO. I get it. You have, headwinds on the stock right now because of all this political stuff. I get it. But the stock is really just where it was before the election. I know it sounds crazy because the stock's fallen so much, but if you look back before the election, the stock was right here. Before the stock was at $250 before the election. It's at $236. So it just did a complete 180. It went from, okay, the election, oh my God, this is great. Elon Musk is friends with Donald Trump. It's going to benefit Tesla. And it's like, wait, now half the world hates Elon Musk and he's in Doge and boycott Tesla. And the stock just drops back down to where it came from. You're literally just right back to where you were before the election. Honestly, you're just right back to where it was. So yeah, it's really, when you look at it that way, you're like, oh, wow, that's actually not that bad. It just feels really bad because the stock was all the way at 480, but it had no business being here. Like it had no business being here. Everyone got so excited because Elon Musk is tight with Donald Trump, they just assumed that was going to benefit Tesla in such a huge way. And the stock just went out of control and it really didn't make any sense. And now you've come back to reality. But I'm still bullish on Tesla long-term. Stock might fall further. It might. Absolutely, stock might fall further. But I still own it, and I plan on owning it for a very long time. Matter of fact, I actually bought a few more shares last week. I bought a few more shares last week. Just because I can't not. How do you not? The stock was down 50% from its high. I'm like, all right, I'll buy some. So I bought some more. I like it. I like Tesla long term. We're going to welcome Luis. Luis, welcome to the family. 16 what? Oh, we only had 17? Oh, I didn't know that. I didn't know we only had 17, Joe. I didn't realize we only had 17 laptops. All right, so then we have 16 left. All right, everybody welcome Luis. Luis, welcome to the TTG fam, guys. Everybody welcome Luis. Again, go to ttgoffer.com if you guys want to see what you get with your membership. Again, you'll get a double your money back guarantee when you join us. If you guys can't make your membership fee back at least once, you'll get double your money. We'll give you back $2,094. The cost of the membership for the whole year is $1,047, and it includes everything on that page. So you get Benzinga Pro's newsfeed. You get Trading Views premium charting software. The Trade Ideas scanner streams on our platform for you guys to use. You get dark pool data, unusual options activity, congressional trading data. All of that stuff you guys get included. You don't have to pay extra for it. Some of you may pay for those things already. You don't have to anymore. You join True Trading Group, pay $1,047 for the whole year, and you guys are good. We also accept PayPal credit and Klarna. If you guys want to use some of those afterpay methods, you can do that too if you guys want. All right. So, yeah, it's crazy what has happened with. It's crazy what's going on with Tesla right now. And I just got to say, I want people to just realize, here's the thing. Like people are boycotting Tesla and they're like hoping that Tesla fails because they don't like Elon Musk. I have news for everybody. If Tesla fails, or like they're like want the stock to go down, they want to boycott Tesla. If Tesla's business suffers, and let's say Tesla stock goes down, you're not hurting Elon Musk. You're hurting the 125,000 people that Tesla employs. Because if Tesla's business fails, Elon Musk is still going to be worth $100, $200 billion. He's going to be just fine. But if Tesla's business fails, you are going to have tens of thousands of hardworking Americans lose their job. You're not going to hurt Elon Musk. You should never root for a company, an American company, to fail. Because the person at the top, who's Elon Musk, is still going to be worth $100 to $200 billion. But you're going to have tens of thousands of Americans lose their job. So who are you really hurting? You're hurting your neighbor. You're hurting your friend who actually might share the same political beliefs that you do. But because you hate Elon Musk, trust me, Elon Musk is not going to care if Tesla stock goes to 150. He's not going to care if revenue slows. You're not going to affect his life in the slightest bit. But if their revenue slows to the point where they got to start cutting employees, then all of a sudden 20,000 people lose their job. You got to use your head. You should never root for an American company to fail. Think about the workers. Don't think about the person that owns it. So that's the reality of it. Elon Musk will be just fine. You can boycott Teslas all you want. Elon Musk is going to be just fine. So that's it. Oh man, I really touched a soft point there for Coy Hyde. I really touched a soft point there for Coy Hyde. Look at the smart guy that bought the fascist stock. Coy Hyde, good luck, brother. Good luck with the rest of your life. Oh, I feel so bad for people like you. I really do. Good luck the rest of your way. So that's all. All right. That's Tesla. I think that wraps things up, honestly, for me too. Because I got to get ready for my mentor session tonight. So it's 5:18. But yeah, see, exactly, Brendan. Exactly. You separate the two. See, Brendan, I commend you. You separate the two. I commend you. I try, guys. We don't allow politics inside True Trading Group. I actually had to mute somebody today inside a chat because they actually got super political about Elon. It was actually about Elon Musk, and they got really political with a comment inside a chat. And we just don't tolerate it. I don't tolerate the political stuff. I don't care about what you think about Elon Musk. I don't care about what you think about Doge. I don't care about any of it. Go to Facebook for all of those comments. Facebook. You guys can have at it on Twitter, have at it on Facebook. That's where you go for that stuff. I know it's very emotional for a lot of people. I get it. I really do. I understand. But I try very hard to never show you guys my political beliefs. I try to show you never really, who's Mike voting for? What's Mike think about one topic versus another? I try very intentionally to not show that because you guys don't really care. Or at least you shouldn't care about my political thoughts. And I don't really care about yours either. Okay. And this is not the place for it. This is the place for what's in front of us. How can we make money from it? Right? What's in front of us? How can we make money from what's happening? That's all that matters. You don't have to like or dislike what's happening. You don't have to like or dislike what's going on at the White House. But whatever is happening, whether you like it or not. and the market is here, and it's our job. Our job is to listen. If you don't like what's going on, that's why everybody votes, right? That's your opportunity to change what goes on. Okay, everybody gets to vote. Okay, you can vote for this person, you can vote for this person. That's your time to try to affect that. Once that happens, you can't change what's going to take place. Whether you like it or not, you're on the plane. Doesn't matter if you don't like who's flying the plane, you're on the plane. We need to figure out how can we make money from what's going on. You're not able to change what's happening. How can we make money from what's going on? Whether you agree or disagree, whether you like or dislike what's happening. Let's just figure out how to make money from it. That's it. That's all you should focus on. That's all you should care about. That's all I care about. Yes, I have my political thoughts. Yes, I voted. I will never tell anybody who I voted for. You will never get that out of me. Okay? But that doesn't matter. The stock market's open. Stocks are moving up and down, and we're going to make money from it. That's True Trading Group. Okay? So no political stuff, no political comments. Keep all that stuff aside. We don't tolerate that stuff inside of TTG. Okay? That's all. Will the Yankees make it this year? John, I really don't think so, man. I don't know. I mean, they'll be good, but they're not going to be good enough. At least I don't think so. I don't think so. I think Yankees will be good, but they're not going to be great. I don't think so. I don't even know if they may. I don't know. Yes, I voted for Pedro. I voted for Pedro. Yes. You never go wrong voting for Pedro. Never go wrong voting for Pedro. Yeah, the Dodgers probably have the best roster that I've ever seen on a baseball team. Honestly. You have the best pitching staff that I've ever seen in my entire. Yeah, they have the best pitching staff since the 90s Braves. Because the 90s Braves, that was the best starting pitching staff that I've ever seen. With Maddox, Glavine, and Smoltz, that was the best pitching staff that I think it was ever assembled. The Dodgers have the best pitching staff I think ever assembled now. And their bullpen is still unbelievable. And you have 3 MVPs back to back to back in your lineup. What? Mookie Betts, Freeman, and Ohtani? What? It's just ridiculous. You guys are ridiculous. You're going to win it again. If you stay healthy, you're going to win it again. Oh, they're so good. Anyway, that's all. I still can't get over that one person. It's like, oh, look at this guy. He bought the fascist stock. Come on, dude. It's a stock market channel. Of course, I'm going to talk about stocks. Yes, I own Tesla in my long-term portfolio. Jesus. All right, folks, I'm going to go. I'll see my members that are in my mentor program. I'll see you guys. In about 30 minutes or so. For the rest of you, I'll see you guys all tomorrow. Subscribe to the channel, smash that like button, show some love, turn on your notifications. If you want to make money and not talk politics, join True Trading Group, ttgoffer.com. I'll see you guys all tomorrow. Have a wonderful rest of your night. Take care, folks.